Hello and welcome to Ask Slim Live. Today's October 24th, 2025. This is a trade planning session with Slim's analyst team. We have myself, Matt, Arvi, and Katie today. Excited to have all of you joining us. Just getting started with our overview of our calendar so you have some sense of what's coming up. Obviously, today we're doing our Trade Planning Live event. Next Friday, we'll be doing a Market Week Live with Slim and the analyst team. On November 7th, Friday, it will be a recorded Market Week from Slim. And then the following week, there will be no Market Week or live event. However, on Thursday, you'll get a recorded market brief, an index update from Slim. And then on Friday, November 21st, it'll be the Market Week Live with Slim and the team here. If you are a member, you can always check our content and events calendar right on your dashboard to be caught up to speed on what our schedule is in terms of our content. Questions on that, you can reach out to jason@askslim.com regarding the schedule. Our information that we provide on any of our platforms or live events are for informational, educational purposes only, should not be construed as investment or trading advice. Today's hosts, we have myself, Matt, we have Arvi, we have Katie. We're the analyst team with Slim. We all are proteges of his, learning and becoming experts in the area of cycle analysis, momentum analysis, and Fibonacci swing high, swing low techniques. We combine that into the Ask Slim methodology. Together, we have over 50 years of experience as market participants, technicians, and active traders, including Slim. We break the 100-year mark. If you want to learn more about the team, you can go to AskSlim.com about Ask Slim and meet the team there. We have several interviews that we've done with Slim, and they're insightful, fun, and interesting. All right, today's agenda, we're going to start off with our member Q&A. So this is a chance for our members to put in symbols that they want to see us review and perform the Ask Slim methodology live in front of you. So we'll be doing that. So if you do have symbols of interest, please put those into the Q&A now. Let us know what that outlook period is that you're most interested in us reviewing, and we'll apply the Ask Slim methodology to that. We do have a special that ends this weekend in level 4. I'll quickly review that. And then we're going to wrap things up with our segment that we do on translating technical analysis into option strategy selections. So I'll do a review of the analysis on IWM, and then Katie's going to illustrate how to leverage those technical insights when selecting option strategies. Okay, so we're going to kick it off again with our member Q&A. These are symbols and chart requests that come from our members, and we're going to take a look in our Q&A right now in our chat and see what we have.
I'm seeing RGTI. Katie, do you have that one by chance, or Rigetti?
No.
No, it's been certainly in the news of late. I can take a quick peek at that. There's TSLA, UPST. Do you have UPST?
Maybe.
If not, yeah, if not,
see.
just you can give a couple of minutes and I can work up a
I've had
chart
this
on
one
these.
recently. Yeah, I have that one.
Okay, well, why don't you start, and I'm gonna try to see if I can build out RGTI while you're talking.
Okay. Let me share my screen.
Okay.
Okay, let me know when you can see Thinkorswim.
Not yet, still loading.
Still loading.
Yep.
Should be up there now.
Okay,
Yep.
great. Let me just zoom in a little bit on this one. Okay, Upstart Holdings. This is a dominant 34-bar cycle, and it is broken into minor half cycles. So we made this move up towards the prior cycle peak, couldn't get there, dropped back down. This is obviously not a rising support zone anymore. just a support zone, got a little bit below that. This is a good strong candle. I'd like to see a little bit more. And if this looks like it could be an intermediate low that is forming, then I would probably shorten this cycle by a couple of bars. You'll notice that over here, the low formed slightly early, also here. So it would be reasonable to slide this over a bit or shorten these cycles up, but there's really no evidence yet that would suggest that that's something that needs to be done. I do have this timing window that starts 11:03 to 12:12, but one of the things that you need to be aware of is that just changing these cycles, adjusting them by one single bar could, can make you have to be very aware when you're getting towards the cycle timing windows that there is always a possibility for an early low. Just adjusting the cycle by one bar could make that inside the timing window. So, you just have to be very alert and not take these cycle timing windows very, very literally. It's a suggestion, it's an ideal. So I'm going to be watching this to see if that is an intermediate low forming. Let's look over at the daily chart. So it looks like this I would adjust this slightly, make it 27 bars, move that out, and then it gives us our low right here. Let's take this, move it out here a little bit, and then you can see that this would be a nice move up. Obviously, this chart isn't updated, but you get the picture. These cycles are pretty consistent. This one was quite early. This one is late. Sometimes you get a long cycle like this and then a short one. So I want to see this form a basing cycle, which is going to be a positively configured cycle that happens after a negatively configured one. So you can see this one's negatively configured. It ended lower than where it began. And this one, I want to see it end higher than where it began to make me think that we might have an intermediate and synced short-term low in place. Here's earnings coming up on 11/4. So you do need to be aware of that because anything can happen on earnings.
Katie, Katie,
Yes,
if we just jump back, I just want to help the audience in terms of the weekly chart.
here it is.
Yes. So with the reversal scout currently negative, if you saw that turn positive, that would add to the
Mhm.
odds for you that we are seeing a low. So right now, as you said, that's likely not the case, but that would definitely be something to monitor. That would give you a lot more
Yes.
confidence, right?
Yes, absolutely. And I'd want to see, you can see that this candle is making a higher high than the one
Mhm.
before, higher high, higher low. So I'd like to see that continue. And if it does, of course, the reversal scale will start to turn up.
Okay. So that's
All
that's
right.
just a way to have a real hard, um, you know,
Yes, and you can see that,
rule for
that does
yourself.
happen after these intermediate lows form. You get
Mhm.
the return to positive momentum. Now,
Right.
sometimes you get something like this where it's really
Copy, sure.
choppy. It goes positive, then back negative, positive, but that happens a lot with these kind of very flat cycles. This
Sure.
one is not really like that. It's definitely more of a typical ideal sort of cycle.
Hmm.
Um, and then if this is the low, then I would do something like, let me just close that. This got down below the support zone there. So, maybe the probability isn't super high that it's able to take out this prior cycle peak, but I would do a draw and put in a resistance zone here, starting from the 38.2% fib up to the 61.8, and then with a possibility up here of the 78.6 at about $79.60. So those would be the levels that I would be watching for some strong resistance,
Okay.
considering that this cycle has retraced really deeply. Let's go and take a look at Tesla. Sorry, let me just import this grid so that we can take a look at that. Matt, are you able to see Tesla?
Yes, I can see it.
Okay, great. So what we have here is some uncertainty. Is this one of these candles here forming a low, or is that low going to come out later in this timing window? This price action with this kind of hammer candlestick would suggest that the low is already forming. So because this did only retrace down to the 23.6% fib, then that would be a very strong cycle, and I would expect it to be able to take out this high with a possibility of getting up here and through this all-time high. So I would want to switch over to the daily chart. We never even really got a return to negative momentum here. This is just a very, very bullish cycle. Let's look at the daily chart. So you can see that we keep retesting this cycle low support. We are in this resistance zone. We had a very powerful up candle yesterday. We're in the resistance zone. It's struggling to get through there. You can see 1, 2, 3, 4 times it's tried to get through there. And that is why I'm wondering if we're going to get this low, which could just retest that 23.6% fib out here at the end of this timing window in the beginning of November when it syncs up with this daily cycle timing window. So for me, this one is still a caution. The reversal scout is flattening out. Looks like it wants to turn green, but it is still negative. This is just kind of a sideways consolidation. So for me personally, I'm waiting until this cycle plays out, and then I think that it will be able to do better. And I think that was all I had, RB. How about you?
All right. Yeah, so I can go ahead and see RGTI here. Thank you,
Okay,
Katie. Appreciate that.
sure.
Um, Very interesting chart, right? We all have seen that huge move that formed in RGTI off of that, right? And I think what's more important to understand is, why did it do what it did, right? Um, you can see a huge rounded look there in RGTI, and that led to a move from 20 to 60. I think that is really what you want to be highlighting, not just where are we now? Well, where did we come from and why? I think that is super important. That's what I try to highlight in everything I do because that's what you want to learn. You want to learn how do how can you actually be long names that move from 20 to 60, not, just where are we now? Where have we come from and why have we come from there? Where was that long? Why was it there? Right? That's, I think, what is really important to like see and be able to then trade, right? There's a trough here that is due for now, right about here. So we'll have to see if that was the low, but it is certainly possible. But you want to see this. So this is really important. Okay, we saw that huge move from, like that from 2 all the way to like 20 plus sold off. But then look at what's happening. I'm just going to just draw how this formed. Look at that, getting tighter, tighter, tighter. And then what happened from there is you moved up and out. So you see there's a little bit of change happening here. Then what happened? You started to move like this. So what's happening? You're forming now higher highs and higher lows. And then what happened? Higher low, higher high. You can see a shift that's happening. So where are we looking? We are looking in time at that old high right there. That's where we are headed. Then look what then you can see what happened here. Another higher low into that low. And then what happened here? Let's keep moving right. Unfortunately, this is not perfect, but you can get the sense right here. This is what's happening. Look at the shape of the move. Look at how it's getting higher and higher highs, incremental higher lows. And then on this right side, look at how tight that is prior to the move. But look at how long this has formed. This is from the end of last year until now, 9 months to form that low and to form this like really huge saucer. This is what you want to be looking for. Something like this that has not, this has formed over months and months and months of forming a series of higher highs and higher lows prior to getting that move in time through that high. But where was the actual long setup? Well, at least from how I look at things, we have to zoom in. That long setup was right here. As soon as you cleared that high, with volume, 100 million shares traded that day. So you had your day here to be long through this zone here, right? And for me, it would be versus this higher low right there. Okay, so you're long right around 1750 versus even as low as 1520, and then you see what this can do. First area is the old swing high. First area is all the way up here at 21. Why? Because that is what is obvious. That is what everyone in the world can see is old swing highs. So that's your first exit right there for just a piece, and then you see what it's doing. Look at these huge moves up on absolutely massive volume, right? Just white bar after white bar. So this is what you want to understand. What, why did it do what it did? It did it because it took 9 months to form, and it formed that really tight coil. That's what you want to learn. Coils. Understand coils, and you can make a ton of money. And that is why that did what it did. Okay. So now, where are we now? You can see there was that one little move there. Again, look at the volume increase. Look at this absolutely massive increase in volume as you're moving to highs. So super duper powerful. And now, yes, we have a low that is due right about now. We have to watch to see what happens from here. But this was the actual setup was back here and then back here. Now you just have to watch to see, right? What kind of rally we get. Does it start to move over that level right there? If so, you have the 78.6 and the old swing high. If it can't and it has a weak rally, then you'd be looking for another move back down somewhere into that next trough, that's due somewhere closer to year end. But right now there isn't anything here. It's just you're just really seeing what kind of action you get off of this low, and if there is an actual turn back to the upside. But I just want to emphasize, right? The real money was made here and here, right? Here, there is no real edge right now. You have to find an edge. You have to understand why it's there, understand where your actual longs would be, so on and so forth. And you also have to know when there is no obvious edge, and you have to let the market show you what it wants to do and then get on board. That's where we are now. Okay, so that's a look there at RGTI. I think a very interesting chart. Do we have anything else, Matt? I can't see the screen with all the Q&A.
We did have natural gas.
Yeah, natural gas. Let's take a quick peek at that.
And then Katie, did you do NVIDIA or
No, I
NVIDIA?
haven't done NVIDIA. I think I would look at SMH because I'm in the process of revising NVIDIA right now.
That would be the other one. And then
Yeah.
Sure. Yeah. So /NG, it's had a nice move up, but really just in a sideways trade. We have a low that's due here, somewhere around the Q1 of 2026. Short term, you can see it's just going back and forth, back and forth. There really isn't anything happening right now in NG. We have this old high, we have this low now, and we are right in the center of that range. So again, is there anything really happening right now? Not really. Just need to give this one time, so we can look at SMH. SMH has been very, very bullish. Okay, so let's pop over to the weekly chart. We saw that move down. Again, that on its own can look, okay, well, was that a high? Focus on your overall signal indicator, right? The RS weekly has been firmly positive. Simplify what you're doing. Don't make it overly complicated. Simplify what you're doing. Understand how you are actually having an overall trade orientation, either long or short, based on what you are looking at and seeing. What you're seeing is the RS is firmly positive. That is just one little move down in the overall context of a firm up RS. So that says the overall bias is still up there in the SMH. There's a level somewhere around 364.30-ish. Jump over to the short term, okay? A low here that has also likely just formed. We're getting into a new rising phase. Everything is still positive, so that is leading to a positive short-term bias. Let's go ahead and draw in our levels, which I have not yet done here, from key low to key high to key low, and you can see it right on 361 to 369. All right, those are our next levels up here in SMH. And I'm going to go ahead and hand this off to you, Katie.
Okay. There was just one more that I do have some analysis for, and that is Teladoc. Let me share my screen. Let me know when you can see that.
Yep.
Yep.
All right, this is Teladoc Health. If I zoom out, you can see that this has been quite flat. See, from a high of 308 back here in 2021. So in order to see this at all, we're going to have to zoom in like that and then expand it up. So we have relatively short cycles in here, 18 bars in length, and you can see that we formed an intermediate low right here back in August and now moving up. So we have taken out the prior cycle peak, which was right here, just getting through that level. So I want to go ahead and do an extension to see where Teladoc Health might end up. Okay, so you can see that we're right at this 100% extension level, struggling to get through that area. It's bounced off of there about 3 times now. And so our next level up, we are having positive momentum. So if it is able to get through there, our next level up would be the 127.2 at $10.25 and then 11.20. So we will have to see. I would wait for a close above this $9.50 level. Over on the daily chart, we had a timing window here. So we had our low form right here. And now we had that was a bullishly configured cycle, a right-hand translation forming late in the cycle, a decline. Let's turn on our fib draw tool. So from this low to this high, we just made it down to the bottom of the support zone at the 61% fib, now moving up again. So we do have a timing window that is coming up. Ideal is 11.2. So sometime next week, this timing window will start. This is going to form some kind of a retracement, and then we would expect another attempt to higher levels. So I would wait for that retracement. Right now, we've got a support zone that runs from $8.96 on the top to $8.47 on the bottom if we're able to get down into that zone. And then you start to see a lower time frame bullishness, then you might want to enter for a long side trade up to the $10.25 area up to 11.20. And that is all I have.
Okay. Excellent work, team. It looks like there was one more that came in earlier on that we can take, and then we'll have to move on to the next segment. If your symbols didn't get covered, you can reach out to us if you are a premium member on Discord, and we can look to cover those in an upcoming office hour segment or in another live event, which we have next week. So that's how you can get your symbol request covered, is through that process. The question that came in was regarding Qs in terms of projections. So I'm going to pull up my grid on the Qs real quick and run through the projections that I'm seeing. So just give me a second to be able to share my screen. So the audience member asked about if today's favorable data has erased any of the downside projections that were there previously. I'm not sure exactly which ones the individual is referring to. It could be from maybe a prior market week on the NDX, relevant to the weekly projections. Now, those weekly projections, if that's what you're referring to, were a function of a timing window. Now, what we always talk about, though, is when you really want to look at precise projections, they should be a function of the bias. So anytime you have you're unfamiliar with or unsure of what the bias is, it's something that you could reach out to the team to get a better understanding of, because without a confirmed bias, it's very difficult to have projections. And when you do have a confirmed bias, then you have a set of projections that are what we call in play, because they're a function of the pattern structure and then also momentum. So what we've in RV identified that in his pieces that he just talked about, when you're looking at our reversal scout, it's critical that you have a sense of from a top-down approach. So when you go from either monthly to weekly to daily to 2-hour to 15-minute, when you're looking at these projections, you want to have a sense of the dominant directional bias, the dominant pattern structures, the dominant momentum conditions. The Q's momentum condition and pattern structures have been positive, and they haven't shifted. And until you actually get those shifts, you are in a way guessing on your projections to the opposite of the trend, which is fine to do from a hypothetical standpoint. But if you're really wanting to have precise trade planning, you want to be in alignment with that directional bias. And when we use our fib draws, you have to have a set of anchors to be able to do those projections cleanly. And when you're going against the trend, you're not going to have that happen. So right now there's no downside projection to work with, because we don't have a functioning. There's two things. One is just from the fib retracement perspective. So if I'm going off of, I'm going to show the weekly and I'll jump back to the daily. Right now we're at new highs. So you're guessing where the peak is going to be. So if I make a draw, and I'll bring over the NDX because it's got our cycle work, updated cycle work on there. So let's just look at the lows and the cycle brackets here to do some draws off of. If I take this minor trough over here and I do a draw, let's say from the candle that RV picked out and said, hey, whoa, this could have shaken you out of your longs or make you feel like the peak is in place. But again, it's coming in you have to take the entire context. The context is a bullish overall pattern structure, and we have a positive reversal scout. But when you're taking these draws, if we take it from where we are right now, you're making a guess that you've already called the peak. So these levels, 23.6, 38.2, 50% off of this minor trough are not precise. They're not connected to an actual anchor yet. The anchor is going to come when you have a breakdown in the pattern structure or a shift in momentum. So when the individual asked for us to do a downside projection, there really are no downside projections at this point. The downside projections can only come once you have a clear anchor. And the anchors are going to come from the peak, which is going to be a function of a breakdown in momentum and or the pattern structure. So if we go over to the daily chart, right now there obviously is no breakdown in pattern structure. So the only thing I can do for you in terms of a downside projection is to give you a hypothetical scenario based on a look at where a peak could form. So if I'm just doing a draw based off of this FEZ cycle, which is showing dominance, so I have a swing low, so I have an anchor, then I have a swing high, another anchor, then I have another swing low as an anchor. That allows me to give precise upside projections, unlike the downside, which I have no anchors to work with right now. So it's, again, those are guesses. But what I can do at least is give myself a upside projection based on the current pattern structures. And until these pattern structures break down, this is what's in play. So the 78.6 here, so around 25,930 to 26,400 is the upside projection based off the prior pattern structure, which is a function of this daily cycle. Now we can draw from this low up to this potential peak and say, okay, maybe we get a pullback into the 50% to 61.8, and if it's really strong to the 78.6, or I can start to draw from the 100%. But again, what you'll learn as you do this long enough is when you fight the dominant structures, the dominant trends, the dominant momentum, it's a painful experience because you're constantly guessing on where these peaks and troughs can be. It's if you do catch one, yeah, it's exciting. But the higher probability scenario is, as we talk about, and you hear Katie and Arvi talk about, and Arvi went through that in his segment, is let the market tell you, let the market talk to you. And it'll tell you, it'll let you know when things are shifting. And right now, we just haven't seen those shifts, and it feels like it's been forever since you've really had a breakdown. But until you get one, the path of least resistance is still up. So downside projection, you can't really even pinpoint that right now because we don't have a peak anchor to work off of. What we do have are upside projections, which are a function of the pattern structures. And now the momentum that again shifted. So this is the daily chart. And I'm going to go back over to my cues here just to see how this puzzle comes together. Yes, we had this 1 day wonder downside, sharp downside move, but look where it went. It went right into support. So it's not random in terms of what happens. The buyers were waiting. And where were they waiting? Right inside, 38.2 to 50%, areas that we typically pinpoint. It got down near a low. So those that were short said, I think I'll take my profit right here as I get close to a low. That's a key swing low. So this becomes an anchor point. So now you watch this anchor, and once the reversal scout turned back up in the 2 hour, when you have dominant structures and momentum in the weekly and even in the daily, this is still a positive overall pattern here. You have to say, okay, it's probably game back on the upside. Reversal scout turns up, slim ribbon turns up. Yeah, we got some choppiness, but look where these lows are. We have higher lows. We have a low, a higher low, another higher low. And then today we have the breakout, which is the confirmation of what the pattern was that was forming prior. So it's not about, as Arvi said, not about what's happening right now, which yes, you have to evaluate if you're going to put a new trade on, but where did it come from? What caused it? And right now, if you want to do projections, the projections are on the upside until something shifts. All right, that's a deeper dive into how we look at projections. Anything else, team, that you see that we need to cover, or is that it for this segment?
I think that's it, man. Great job.
Okay. All right, excellent. Thank you. Okay, so we're going to move on, and we're going to do a very quick review here. So this is the final weekend for our level 4 special offer. It is a 1 month. It's a non-recurring offer. It's 37% off. It's $99. It's not going to auto renew. So if you're new to Ask Slim, level 4 is our top tier membership. It gives you full access to all of our levels, level 1, 2, 3, 4. And most importantly, the charts that you saw today that we use Thinkorswim, that platform, you will get access to our chart grids. You get access to our indicators. So this particular grid here, where we have a weekly, daily, 2 hour, 15-minute setup with our slim ribbon reversal scouts, with our custom indicators, including the OBI, the MCI, our SMI, all of that we use to put together these trade planning grids, you will have access to, and you can actually import them into your own platform. And it's going to shorten your learning curve, and it's going to save you, literally probably hundreds, if not thousands of hours of effort the team has put in over the years to construct our indicators and construct grids that help us in really at a glance get a sense of what's happening in the markets. So with level 4, you do get access to that. We have several grids that we've put together for a variety of trading styles, whether that's from a near-term, short-term, intermediate, longer-term investor styles, and you do have the ability to get access. There is a resource area in level 4 where you can access the video tutorials and the specific TOS links that you can import into your own TOS platform. It does require TOS. Now, the other major enhancement that you get or upgrade, what you're going to get with the charts is spectacular, but then also with our market conditions monitor. So with level 4, there's 2 upgrades that you get with the MCM. So the MCM is a real-time momentum. Right now, it is a momentum monitor, and it's monitoring the momentum conditions at various degrees of time frames and trader types. And so what we've done is, again, made the effort of assimilating what you're seeing on this chart from a weekly, daily, 2 hour, 15-minute perspective. And we've created an algorithm that instantaneously takes all of that logic and creates an output. So if you're a near-term trader, instead of trying to figure out, which you should try to figure it out, but if you're trying to do it in, in seconds and on a lot of different symbols, you don't have to do it step at a time. You can go right to the MCM and you can go, okay, I'm interested in the near-term trader types. What are the most bullish or bearish symbols? And you're going to get those updated as they happen. And there's over 350 symbols in here. And you can see how it starts to, it'll show you which ones have shifted most recently. So there's a change log, and then there's the trade setup condition. And again, it brings it's a composite of daily, 2 hour, 15-minute for the near term. If I go to short term, it's weekly, daily, 2 hour. And then there's even what's unique with the level 4 is you get intraday. So with the intraday, it's going to give you the composite of our 2 hour, 15-minute, 3-minute indicators, reversal scout slim ribbon with an algorithm that gives you the trade setup condition, and then an output that tells you every time there's a change, what are those changes? And then you can sort them by very bearish or very bullish. It's a fantastic tool. If you're looking for trade ideas that are already filtered based on momentum, based on several time frames, there isn't a tool like this that I know of that's out there. So this, instantaneously, I mean, I love going here and just going, okay, we just got a move right now. So if I look at, for example, if I was a near term or an intraday trader, I could be doing a couple different things, but right now we're getting a little pullback, at least in the Russell. So if there was something that was weak that I wanted to look at shorting maybe, 10 minutes ago before we had this candle breakdown right here, 10, 15 minutes ago, you can use our day trader service to really gauge this stuff. But you could come into the intraday and you could look for very bearish ones that are weak or ones that were neutral. And then as things got weak, they start to break down. And those would be the ones that are likely to have more of a magnitude move to the downside when the indexes get weak. And then you can do the opposite, where you might look at, symbols that are bullish or very bullish. Once we get a turn back to some strength, let's say in the next couple of hours, you can come to the market conditions monitor, and you can click on which ones are shifting, because this is going to tell you where the strongest momentum symbols that are in play are happening. So it's a fantastic tool to use. Also, there's ways to notify yourself when things are changing. So if I wanted to be notified, let's say that I was watching IWM and I want to be notified when it goes to, and I already have some set, but neutral, slightly bullish, or bullish in the intraday. So that would mean that you can see here 2 hour, 15-minute, 3-minute, that the 3-minute momentum indicators are both negative in the slim ribbon reversal scout. So if I wanted it to be slightly bullish or to be notified or bullish, there'll be one of these two that are likely to shift, or both, and then I could get a notification on my desktop. And then if I had a plan in place where I wanted to be back long in IWM or the futures in RTY or something like that, then this could be a great tool to help give you those signals. So those are the two main differentiating huge value adds that you get with level 4 is our grids, our charts, our indicators, and then the MCM. Okay, so again, that wraps up what we have on special right now. Final weekend for level 4, $99. That gives you a full month, full access. If you're interested, you can go to the site and sign up, or you can write directly to me at matt@askslim.com. All right, so we're going to move into our final segment, and that is where we're going to take a look at some technical analysis on IWM. And then we're going to have our option strategy expert, Katie, is going to review that technical analysis and talk about how she then applies that for option strategy selection. So I'm going to do the review of the analysis on IWM. That's a symbol that we're picking. It's the one we typically use. So there's some consistency in the process. And I'm going to walk through it succinctly here from weekly, daily, and even the 2 hour in terms of the overall analysis. And similar to the review on Nasdaq and QQQ, you can see here reversal scout still positive, overall pattern structure still positive. Why is that? Well, we have a series of higher highs and higher lows, and based on the overall cycle structure here, clearly positive. We're in a extreme right-hand translation. This is a period of risk. You know, it's a, when we say the period of risk or the cycle low timing window, these are reference points for us. They're windows of time where we want to monitor for certain price action activity. And we then use what happens during those time frames to help us with understanding if a low has been set, if a peak is, where's the peak been set? If it's been on the right side of the cycle, then it means something to us in terms of it, this cycle has used up basically all of its time, still making new highs way the heck out, even into our cycle low timing window. That's a very bullish, very bullish condition then, rather than a left-hand translation, which would be very negative, which means that you would fail early in the cycle, and then you'd have all this time to be in more defensive mode or short side mode, because the cycle now where the money flow action is going to be more to the downside, more outflow than inflow. So that's how we use the cycles in terms of time, and we're in this timing window, and Katie actually manages a whole tracker for our focus list of symbols, where she's going through these symbols on a regular basis, basically every day, and indicating to all of us, obviously us as the analyst team, as well as our members, where are we in these cycle low timing windows, because it's very important to get a sense of where you are and where you're coming from. So right now, IWM very strong. If I look at where we have some projections in the upside, as I said before, based on what? The pattern structures, the momentum. Currently, pattern structures, momentum still positive. So if I just do a draw, this is an aggressive upside draw, but it's based on the current pattern. So we had this swing anchor. This is now a swing anchor here, swing low anchor. And it's also a pending cycle, weekly cycle low. It just is, because this is all we've been given so far in the timing window. This isn't typical at all. Typically, you'll get a pullback at least to say the 23.6 from the primary low. That hasn't occurred yet. So this is an uncommon situation. If we actually get a low that occurs like this, it might require us to revisit the overall cycle brackets. But based on this draw from that set of anchors, and then if I do another one, this is how I came to these levels here. So the next target on the upside is around 256, and then we got 260, and then this is where I would look at as very, very meaningful resistance. Could we get a important peak where the magnitude of the move from there is much greater than what we've had before, meaning we go at least 23.6, if not 38.2 or 50%. That's where you look for, sort of finality to happen. But right now, so we're positive. This is bullish in the IWM on the weekly. Go over the daily. Overall, this is bullish. Yes, we had Slim pointed out that there was a megaphone pattern that was forming. That was some really good eyes here. You can see that, where we have these diverging trend lines a little bit, as they're broadening out, a broadening top here. And this one looks like it's breaking out to the upside. So the upside short-term target zone that I have right now is around 254.75. So call it 255 to about 257. Now, when I was putting together the information last night, I was, if you ignore what happened today, we've been in a very choppy situation, overall still positive. And there was really, with this megaphone top forming, two trigger points that I was watching for. One was a breakdown below yesterday's low, which would be negative, which could then suggest that we are finally getting maybe that peak, and then we'll get that move lower. Well, we didn't get that. Today we got the breakout to the upside, which is the higher probability anyways, based on the overall more dominant bullish conditions. Yesterday, this is why it's important to look at multiple time frames. So the reversal scout, so we're 1024, right? So today's 1024, yesterday's 1023, right around 10:30, 12:30 p.m., the reversal scout in the 2-hour went positive. Our SMI indicator, the fast line went over our slow line. That actually is more sensitive even than the reversal scout. That happened around, that was really at the opening, even say around 10:30. So around 10:30, things started to shift back to a bullish momentum condition in the 2-hour. So if you're someone who acts on momentum, this was a signal to likely go long again. And then today was, again, the confirmation of this pattern here that was starting to develop, which was a function of the bigger patterns. And so at this point, Katie, the analysis is suggesting we have positive conditions. Our price projections run from about 255 to 257. This could happen, Katie, because if we're looking at, the cycle peaking here, we have some conflicting cycles going on in terms of the black cycle here is the Russell cycle, which is calling for, we should see a peak here shortly. And then actually we should be in the cycle low timing window here coming soon. So that should drag a little bit on this move. And the FEZ cycle is the idealized peak is coming, right around here. So that would mean that I'm looking at the next week or so, so let's say a week or so for a peak to form, get a pullback, and then probably another rally out. So I'm would ask that you look at let's say the next 10 to 14 days in terms of a strike, or the expiration period, next 10 to 14, and then maybe the next 3 to 4 weeks for a higher move, Katie, that would come and that would push us into, let's say, around 260. So hopefully that's enough information so far to work with, and then we can talk it out as we go in terms of
we'll walk through it. Let me
All right,
just
go ahead.
go ahead and share my screen.
Yep.
And let me know when you can see Tasty Trade.
Yep, we got it up. Thank you.
Good to go.
Okay, so I prefer to start with the longer time frame that you just mentioned, where we perhaps get a pullback and then another move up based on the cycle rhythms and the positive momentum. So if we're just bullish going into that time frame, the first thing we're going to do, I'm using the November 21st expiration cycle with 28 days to expiration.
Okay.
So that's 4 weeks. And correct me if I'm wrong, but that fits the longer time frame that you're looking at.
Yeah, that works out, Katie, because it also would be the starting point of a new rising phase in the FEZ at least. And so that would make sense.
Okay, so the second thing that I'm going to look at in here is the IV rank, and it's 12.5. That's quite low. So we're overall bullish for this time frame based on the momentum and the cycle phasing, perhaps a new rising phase even on the intermediate chart. As Matt mentioned, we have the cycle low timing tracker, and I've got that the Russell as bottom pending. So what we could do is, of course, you could simply buy a call, but Matt and I were talking about flexibility earlier today, and there are certain things that you can do with a spread. I'm looking at a debit spread just based on this IV rank, which is quite low. So if the IV rank and the implied volatility were to increase, then that is going to make our spread more valuable and we can sell it back for a higher price. So I'm going to put in let's just say like a $5 wide spread here. And I'm actually going to move these strikes around a little bit. What you want to do is you want your profit loss to be about 1-to-1. So you can see that that's slightly off. And I'm just going to click these strike buttons and move that around until these prices, there we go, are approximately the same. So we have the long 249 call and the short 254 call. Now this is a $5 wide spread. Of course, you can make yours wider if you choose, or narrower. If you go very narrow, however, the thing that I want to mention is that because you've got a long and a short, if they're right next to each other, there's a lot of friction there, and it's going to make it harder to take profits. So let's look at the profit loss risk graph here. You can see that you do need that move up. Here's where we're trading right now, and here is where our profit zone starts. So you do need to get a move up. What was our target level, Matt?
Our target level is 257 to 260.
Okay, so you can see that at expiration, this is going to be at max profit, which is going to be the width of your spread. In this case, it's $5 minus the debit paid. So if we pay 256, like it's showing on the screen, and it's a $5 wide, then our max profit would be 244. Obviously, the price moving around a bit. So, so that will be max profit at expiration. This orange line right here shows if we had placed this and suddenly today it went to 260, let's say, well, we would only make a profit of about $95. So that's all other things remaining equal. If you had a big move like that, all other things would probably not remain equal. But you can see that this gets, as you get more and more of a correct directional move, you get closer to the ideal. And then if we pull over the Analyze tab and we just move our date out in the future, you can see that as you get closer to expiration, then this orange line becomes closer and closer to max profit. But actually, let me switch that back to today so that we can continue to talk about these kind of things. So if this were to go down, one of the things that Matt was mentioning is that then you can take your short off because this is going to be profitable. You've got a short call in here. You could take your short call off and then wait for that to come back above the 249 if you placed this today and we got a drop into the timing window, let's say it went down a few dollars, you could take off that short call, hold the long call, and then in the rising phase, if it comes back above here, you've got a long call that has, great profit potential. So that is one thing that you could do. I know that, Matt, do you want me to cover the zebra?
Sure, let's do it.
Okay, so the zebra is a zero extrinsic back ratio spread. And it sounds very complicated, but the way that you set it up is you look at the extrinsic value right here in this at the money call. So we've got extrinsic value of 606. What I'm going to try to do is I'm going to try to find another call that's about half of that. So I'm going to go right here and I'm going to buy 2 of those. And then I'm going to sell this at the money one, just 1 of those. And you can see there is very little extrinsic value. This is a large debit. It's $1,976. So that's quite a bit different than just doing, a narrower debit spread. But you do have max profit potential is infinite, unlike the debit spread, which has a max profit. So if IWM were to just take off to the upside, you can see that this earns 1-to-1 just like stock does. Basically, 95 delta, it's like holding 95 shares, and your profit potential, if it were to go up to 260, is about $1,000, and you continue on up from there. So this is also a good strategy for a low IV situation because you're paying a debit and these options will get more expensive if we get an increase in implied volatility. So if you have the capital to place something like that, then this is also a good option. It's capital efficient. If you were to buy, let's say 100 shares, just for ease of math, you'd pay about $25,000. This is not even 2,000. So this is a good option as well. If you are worried about some downside protection here, you could do, now you do have low IV rank, so we have to set this up and see if we can collect enough credit. You could do a nice wide, like expected move iron condor or a strangle. So this bar, this brown bar, vertical brown bar on the Tasty Trade platform, that represents the expected move. So if you were to sell a put on this side and sell a call over here right at the expected move, then that is called a strangle. It uses quite a bit of buying power, $3,900. You have a good max profit, and of course your max loss, because it's undefined risk, is infinite, but you have a 65% probability of profit. So 239 and 261, is that outside of the move that you were talking about, Matt?
Well, the downside move I'm at this point is it's hard to gauge.
Right.
The upside move, that would be at the upper end. So if I got
Okay.
above 261, that would be pretty extreme. But I do like the strategies, and then also discussing how this one could fit or not fit based on the current analysis. I also, how do you feel about, for some option traders that are, let's say, more active, they really can be at their desk and they're really maximizing technical analysis, and also, though, they want to have some that are, I'm going to use the word sort of a lazier approach. And so what I mean by that is, when you have this kind of bullishness at the moment, unless we see let's say a violation of the, let's say, the 2 days ago low, so around 240.75, unless we violate that or see the daily reversal scout turnover, at the moment, the upside projections are what are in play. But if I didn't want to have to be too active with at least one strategy and want to try to benefit from time decay, what if we sold, Katie, like the 250 or 249 or somewhere around there, a credit spread that you can just let sort of ride through the ups and downs over the next few weeks?
Sure. How wide would you go?
I don't know. You tell me what you see as
Again,
typical.
if you're just starting in options trading,
Mm-hmm.
the inclination, I think, is to be very conservative, just to dip your foot in the water and do something tiny,
Sure.
like this. But the problem with this, even though it only uses $60 of buying power, you have so much friction between these two options that are next to each other and
Okay.
wanting to benefit from two different things happening, that
Okay.
it's very difficult to take profits. So I like to, start maybe at least $5 wide. You could certainly go wider if you wanted
Sure.
to
What are
do it.
your basic rules there, Katie, in turn? Because you had mentioned.
Well, if I do a $5, I try to collect at least $1. A lot of
Okay.
people subscribe to the 2/3 the width of the strikes. So that is why they also go out to 45 days to expiration. It's going to be really hard. I mean, look, you're just about at the money here with the 249 short
Mm-hmm.
put, and $5 wide would be, you'd have to collect more to meet that rule requirement. Or if you went $10 wide, you're not even collecting $3. So it's not a third the width of the strikes. It probably would be if you went out to 45 to 50 days to expiration. But you need to be, if you're going to trade shorter time frames, then I like to be a little bit more flexible. Part of this problem is that it's low implied volatility. If we had high implied volatility, then maybe you would be able to collect a third the width of the strikes. But here, I wouldn't place this if I couldn't get at least $1.
Okay. Well,
And
right here
that's
you have a
kind
dollar
of,
44, right?
this is $1.44. So that for me personally, but each person needs to set their own parameters
Mm-hmm.
for themselves according to their trading plan. So
Right.
$5 wide, actually it's $1.73. I didn't have it at 5. So $1.74, you could, go even wider if you chose to do that. Sometimes I like to do $10 wide just to be able to, make it a little bit more worth my while profit wise. So here you're collecting 288. 289, somewhere in there. And here's the risk graph. What you want to have happen is you've got, here's your short put, 249. So your break even is down here, and that's because you need to subtract this credit collected. You've got a little bit of a buffer there. So if you fall below that, you're going to be in your loss zone. And if you stay anywhere above that, you just need to let this decay. And according to your own trading plan, at what point do you take profits? Are you going to, it wouldn't, for me, it wouldn't be letting this entire thing, if I have a profit of $2, do I want to, at some point you have to think about, okay, am
Sure.
I risking the profit that I already have, just trying to get that extra,
Gotcha.
squeeze the
Right.
last bit of juice out of the
Sure.
orange? So
Right.
those
What
are
is it?
some
Do
other
you have
things to
like
think about.
50% or 75% kind of rule, or
I like to start with 50% of max profit. So
Mhm.
if I lock this in at 288,
Mhm.
then I would start looking at this around $1.44.
Okay.
If you're a person who you don't want to be in front of your computer all day, you could put in a GTC order, good to canceled, to close it at $1.44. That's 50% of max profit. If you're at your desk a little bit more, or you happen to notice that it's getting close to that, you could look at the chart. And I do that a lot, reevaluate, is this showing any sign of weakness? Am I, is it okay to leave it for a little bit more? But what I'm not going to do is I've got a profit of 275 and I'm waiting for the last $13.
Makes sense.
So sometimes I start with 50, and then if it's, if this shoots way up, then you might not even be able to close it because your options are so far out of the money that they don't have a bid and ask. So you might just have to hold it. I've had that happen to me before. If it just really takes off, you're going to be so far out of the money that you can't close your options because they don't have a bid and ask price.
Interesting. Okay. Does that conclude that segment?
Yeah, you wanted to talk about some of the nearer term also, if you
Okay,
wanted to
sure.
just do 14 days to expiration. Again, this would be a situation where, again, if you're trying to do short premium, then it might be, unless you're doing something more undefined risk, like a one standard deviation strangle or something like that, where otherwise, you wouldn't be able to collect enough credit. So here's a one standard deviation strangle, 239, 261. If you're entering a timing window and you're generally bullish, but you want to have some downside protection or some benefit to the downside, this is a good strategy. Also, an iron condor, if you don't want to do undefined risk, would be something that you could do, because if you get a move down, then this side is going to be profitable and you can take it off and then just leave the short put, which is the
Hmm.
bullish side, for that move back up into the rising phase of the next cycle. So this is playing for both the downside and the upside. And it's something that I like to do when we're getting late in a cycle where you're expecting a downside move of, hopefully not a huge magnitude. I don't know if you're looking at your draw on the screen, Matt, what would you expect? And with the current high, if we started to decline into the timing window right now, what are the levels?
Sure. Let me just do a quick draw here. Oops. I'm just getting it up. Let's see. Yeah, the right now, I mean, with this bullish action, you might only get a pullback to say 249 to 246, 244 on the lower end.
Okay,
Because
so let's put it at
anything less is
244.
gonna tell you that we've had a breakdown. So
Right. So if that is your assumption, then you could put it at 244.
okay.
Um, what in the next 2 weeks, what would your upside target be?
Sure. In the next 2 weeks, I would say around 255 to 256.
Okay, so let's put it there. So that, we narrow it and we're getting closer to at the money, and that helps us to collect additional credit. So you have a credit of $3.60. And I like, even though it uses a lot of buying power, I like to do the strangles just because they're very flexible. If this continues to move down, you could take this side off for a profit, or vice versa. And you can also roll these to further expiration cycles very easily, unless you get a massive blowout. So this is something that I would consider for what we're expecting is possibly some more upside and then a downside move of some small magnitude and then another upside move. This plays into both of those things. You can take profits on either side.
Yeah, very interesting.
And if you don't want to do undefined risk, which very many people don't, you could definitely cut down the buying power by going further out of the money and buying wings. So here's $10 wide and 256. Let's buy it 266. You're still collecting a good credit, and that cut your buying power requirement down to $714 from what was it, 4,000.
And what is that? What type of strategy is this called?
This is the iron condor. It's the
Okay.
same as a strangle. You've just bought further out of the money wings to define your risk and cut down your capital requirement. And so that is a credit spread on each side.
Can you show the curve, the
Yep,
profit loss
there it
curve?
is.
So this is a expiration period of
Of 14 days.
14 days. And so what does it look like, and where's your profit curve is start and end?
Well, it's in underwater right away, but
Well,
you
that's
just
okay.
need
No, I
the
meant,
time to
yeah,
decay.
right. Assuming that you have, let's say 7, 8, you're in the 7, 8 days.
Yeah, let's say we go out to next Friday, Halloween. Okay. Again, this is all other things being equal,
Right.
but you've got a profit, and we stay right here, right in the middle. You've got a profit of $90.
Yeah. So where do you go? Where does your profit curve end in terms of the price a week from now?
The
Meaning,
prof
where would you enter like a loss? Where's the risk, the downside risk in terms of loss come into play? At what price? Is it
Oh,
258,
you're
259?
so what you're going to do is you're going to take your strikes, your short strikes, and you're going to add and subtract, add on this side, subtract on that side. So 256 plus 284, you're going to be at 258.84 is
Yeah,
your
so
break
it
even to
shows
the
you there, right?
upside.
With the red, once the red comes in the,
Yes, yes.
yeah,
And
yeah,
but you can definitely just figure it out by adding this
yeah. But
this credit collected to each side. Add
but
it here, subtract it here, and that'll be your break-even points.
and I think that what's important here is, as we talk through the technical side of it, this you'd really have to have an extreme move over the next 7 to 10 days for it to fall out of the profit zone, essentially.
Yes. Now you might show a loss as it moves
Yeah,
towards one of your strikes.
sure.
But if it were to do that, you could roll down that side and collect additional credit and keep pushing it out further and further, or simply take profits on the other side that's showing profitable.
Right.
So they do have some flexibility to them. So there's that $10 wide iron condor.
Excellent.
Was there anything else that you wanted me to demonstrate?
No, I think that was great. That was really comprehensive. We covered a lot of different strategies and really showed how you can take the analysis and put it into practice when it comes to option strategies. So that was perfect.
All
All right,
right.
well, we're going to wrap it up here. And again, that concludes our option strategy selection segment, where we take technical analysis and demonstrate how we can leverage that for option strategy selection. Well, thank you everyone for joining us. This is a reminder that our level 4 special will be ending this weekend. Let me just show you that on the homepage of Ask Slim one more time, so you know where you can go if you're interested in becoming a level 4 member if you're currently a level 4 member. So here's a button up here on the right-hand side. You click on that, and that will take you to the level 4 overview special. Click on the buy now. If you are currently level 4, you can reach out to our team at AskSlim.com and upgrade and receive a prorated credit if you are level 1, 2, or 3. We look forward to another segment with you next week, and we wish everybody all the best, and take care, and we'll talk soon.
Have a great weekend.